Hey there, Investor Alex. Welcome back to another ETF Spotlight review. Today we'll be taking a look at IXI, which is the iShares Global Consumer Staples ETF. It's brought to you by the fantastic people at iShares. So this one might be of interest to you if you think that the big consumer staple companies are going to be having a good run in the next few years. So therefore you're seeking a capital growth. And this one's probably sort of a medium to high risk return profile. As always, we should be looking at longer term timeframes for our investment. So if you're like a short term investor, probably shouldn't be looking at these ones because short term fluctuations in the market are hard to predict. Hang around, guys. I think this one will be a very interesting for looking for a little bit of international diversification. Hey there, Investor Alex. This is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so that you can navigate the markets wherever you are. My mission here at KrackTheSky is to give you the knowledge and the confidence to take control of your personal finances, expand your investment horizons, and crack your financial sky. So don't be afraid to give me a thumbs up. And also subscribe. It helps get the message out there. It helps pump the algorithm for YouTube. Just in general, it sort of gives me a bit more motivation as well to keep doing these little reviews for you guys. Thanks. Okay, let's just dive on in. The fund aims to provide investors with a performance of the S&P Global 1200 Consumer Staple Sector Index before fees and all the rest of it. The index is designed to measure the performance of the global consumer staple companies that may include large, mid or small cap stocks. So the index is the S&P Global 1200 and measures performance of the large cap stocks with major markets from around the world. From major markets around the world. The S&P Global 1200 is a global composite index composed of constituents from 7 countries and regions equity benchmarks. So the index is float adjusted for market cap. So Y factor, we're looking at exposure to companies that produce essential products, including food, tobacco, and household items. So obviously this one's not for ESG investors because it has tobacco and other things included in it. So it might be one to cross off the list if that's what you're after. Point 2 here, we're looking at targeted access to consumer staples from around the world in a single fund. So you get a nice basket. You don't have to worry about anything else as you go along. Number 3 here, so global exposure to global sectors, I should say. So pretty much, like I say, you sort of got across seven major markets, so you sort of get that diversification as well. So yeah, so exposure to food, targeted to consumer staples, and also they get that international diversification. Okay, let's take a look at the net asset value. When I looked at this one, we were looking at $86.68, trading above that at $86.78, market cap of about 147 million, management cost of 0.46%, so less than 0.5%. You get your distribution in quarterly, so January, April, July, August, whatever it's going to be. Dividend yield of about 2%, 1.94%. So the fund is generally exposed to the international consumer staple equity securities. that form the index, and in dispensary receipts representing securities in the index, if I can get that out. So the minimum suggested time frame for holding this investment is 5 years, so pretty much in for a penny, in for a pound. You want to be hanging around. This ETF will be of interest to investors that have taken a positive view on consumer staples sector, as I kind of touched on in the first slide and the second slide there. The value of the underlying businesses have been increasing over recent times. That's pushing up the price of the ETF. So obviously if the price of the underlying companies are going up, the value of the ETF will follow along. This is mainly due to the rise in prices of raw ingredients and restrained transport networks, causing some increase in price of goods on the shelf. So effectively it's inflation. So have a look at, for reference I should say, and for your other work in researching, have a look at food, and you know, there's not a great deal in this sector, but yeah, definitely have a look at food. FOOD might be a good comparison. So definitely inflation is something to keep an eye on. You know, whether that has a positive effect on global economics, it's needs, you know, sort of time, only time will tell. Okay, so if you have a look at the top 10 underlying holdings in the ETF portfolio, you got Nestle, Procter & Gamble, Coca-Cola, Costco, PepsiCo, Walmart, Philip Morris, Unilever, Diageo, and L'Oreal. So all, you know, pretty good brands. You know, ESG wise, I suppose some are better than others, but I suppose you could just delete Philip Morris out of the top 10 there, and they're overall probably not too bad. I haven't delved into that side of it too deeply. So if you'd invested your $10,000, you'd be looking at roughly a 253% return. You know, and that was sort of in midway through 2007, so we're at September 2006 I should say. So that's not a bad run. It's a good few years there to see if this thing actually performs well or not over time. So I mean, if you put your money in, you're definitely not down. So since inception, you're looking at 8.73%. Over the last year, you would have got your 10.73%, which isn't too bad at all. So I mean, if you're looking to have a look at sort of the macro type thing, you know, sector play, food, and that type of commodity type stuff, then IXI might not be a bad option for that, but still I think it's, you know, there's definitely better places to put your money in my opinion. I think it's you know, PE ratio is probably a bit high, sort of about 25, and price to book is 4.53. So I think to me it's a bit overpriced. So you know, if you probably want to wait till it pulls back a bit. And also, sort of as we saw in the last slide, you know, it's trading above its net asset value anyway. So I wouldn't be buying it just for that sheer fact anyway. Anyway, guys, I hope this one was interesting. And as always, make sure you're doing your research. This is only a very quick overview. Yeah, always do your research. And if you need additional advice, talk to your accountant or said professional. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's KrackTheSky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks, guys. See you later.